Hello, today is Friday and it is the 15th of June. This will be a quick update within silver, gold, and natural gas. Will be a much more in-depth update this weekend, which will also include the longer term time frames. This one, we will not go longer than the weekly chart. This is a daily chart which for a few days or about a couple of weeks or so was tangling within the declining 18 period average of closes. This is a front weighted average, and now for the last couple of weeks it has used that area as support instead of resistance. But we've also now seen that this week's resistance of about 29 has been fairly strong, unable to really take out the high, although it is maintaining higher lows. So the 18 average of highs is starting to flatten out, whereas this average is not because of its higher lows. And today's volatility is absolutely not there. So everything's still pretty much the same. You break above this level from a downtrend, you come back within the support band. It's still within the support band. If you have that breakout, really not only up to this upper range, but a breakout past this Fibonacci line of 30, then that would be enough to state that it looks as if we should be at least ready to test the previous Fibonacci mark of 32 and 2/3. Let's take a look at this on a weekly chart. And not much going on throughout the week. Overall, long-term perspective within this trend line is that that's the significant trend line that connects both significant tops from the original $50 high. And when you include it within this line here at 26 1/3, then that gives us the descending triangle, and still a decent amount of wiggle room to work within this trend. Overall, when you connect the Fibonacci from this high and this low, it really needs to hold and stay above 40. I'll talk more about that within the weekend. Let's shorten this out some more again to the 5-hour chart. I think this was yesterday's, or no, this is today's. This I was saying yesterday that market was down here. Wait for it to come up to 28.67, which it in fact did. It came up here and then it bounced back down to this lower area in here. I was stating as that's an okay short position with a stop above this line and a target for this area in here, which means if you actually did something like that, you're still waiting for you to lose by going up here or to win by going down towards that area there. If you were playing adjusting to the message of the markets, then quite frankly, this is one that should have been probably exited out as a break-even position, but more on that this weekend. Overall, though, it's trying to stabilize within this level. The low is 26.7, which is no longer available within this chart, as it occurred over a month ago now. So from the low of 26.77 and this high, it's having a hard time, but it is still consolidating within this mark in here. And everything's just going extremely choppy, to say the least. If we take a look at silver, just even on the 10-minute time frame, this is what's been going on for several hours, because this weekend I'm going to go multiple time frames with a 10-minute chart being one of them. Choppy action in here, and then you have this high and really this low, which is very volatile. But I look at this chart and it's a waste of time to try to find any analysis within this, as it's this line here, it's went above and below it, trying to consolidate within it, but nothing here that's stating to make any type of plays, and best thing when you see a chart like this is just to ignore it. Let's now move on to gold, and within gold we'll start off within the weekly chart, and the weekly chart has another test within this declining 18 average, which really is a second test in a sense, because there was this one in here and then the breakdown down here made it so that the 18 average was declining more drastically than it was before, and it really wasn't even declining much in here anyway, and up towards this significant average. Therefore, it's important not to break this low, either continue to go sideways to let this flatten out. Increased gains would also make this flatten out, but if you make a higher low, 1580-ish or so, then it's pretty much going neutral, but still not bullish as of yet. I'm looking for a clear break above this line, or a plunge or market direction downward move to roughly 1400 or so. Let's move this on to the daily chart, which is actually showing interesting patterns on within this. Because this was a significant support at 1623, which is pretty much the same as the silver at $30 per ounce. You make this double bottom in here, where you have this bottom and you have this bottom. If we take the length of that pattern and adjust it to the top part, well, then it's going to make it close to the upper part of this band, which to me still states 1685 on a breakout. But what's interesting about this pattern is you come up to this and then you have three less volatile, really the first two extremely low volatile sessions at the level, and then a period where it tries to break above it but couldn't, and ultimately had a decent 2-session plunge with this one and of course part of this one in here, making a low lower than you would have want, but still that of a higher low. It's now back up to the level, so this is increasing the chances that it takes out this level. Also, by spending multiple days, every single moment that goes by, it's looking more and more likely as if it wants to take this level out. What would make this pattern even stronger would be a pullback down to about 1600 even, pretty much right around this 18-period average of closes, and then a move back up to the 1630 level area. That would make it even more of a stronger play, but quite frankly, it's looking pretty good as if it has a decent chance of wanting to go to this level up towards here. Finally, let's take a look at natural gas, as it had a huge day yesterday. And I'm not going to take a look at the daily chart. I'm going to take a look at the longest time frame I could possibly show you, which is 8 days, because I got a little over 800 days worth of data, and each one of these charts has 100 total ticks within itself. At around 10:30 yesterday, it had about it seemed as if it had like an 8% gain in a couple of minutes and just kept going towards the upside. Within this, it's really hard to tell that it had that kind of day, but within this candle, this is pretty much exactly what took place. Whether to believe this or not, still very difficult to state, because people have been trying to call a bottom for this thing since before this chart was even shown, or before 800 days ago. People are trying to call a bottom in here, and that's because the high was, well, it was not 611 as a significant high. This is 611, but if you look back, and I don't have the data on me, but to the 2007 highs, it was around 13 3/4. Yeah, 1375, which means it's went from that level down to $1.90. That's a loss of over 80%, which is interesting in itself. So what I know about this is if this thing is ready to get going and break above this, really go above 3, then I'm going to be liking the odds that it goes up to this previous or the significant Fibonacci line of around $4 in whatever it's priced in. $4 whatever. Also, we can take a look at this, what could be a possible inverted head and shoulders pattern, which the price objective would be into the same area, because you got a left shoulder in here, you got your head, and development of the right shoulder. It still needs to get above this resistance here at roughly at about 280, and then you would have that inverted head and shoulders pattern. So thank you for tuning in, and have yourself a great day. Bye-bye.